Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. This is Jeff Barton, and you have turned into The Mortgage Voice. I appreciate you listening to the show each and every week. We have an email address here at info@malibufunding.net. And again, I'm Jeff Barton. We have a number of ways that you can get in contact with us. We have a phone number, 888-713-2929. If you want to write that down and you have questions during the show, that'd be great. We have three great guests coming on this show. We usually do about 3 guests a week on the show, try to bring in differences of opinion as well as products, solutions, and questions that you might have or need. We can help you with that. Today's show, we're going to have Lori Predage. Now, we've got a TV show that we're working on. It has to do with buyers who have horror stories in their real estate life, in their real estate stories. And the writer for that show for Web Home Inc. is going to come on the show and talk about her experiences of dealing with and writing and talking to different agents about what goes on in the buying process. By the way, if you have a story out there and you need to get it told, usually we get these as complaints, but if you do have one, I'd love to hear from you. info@malibufunding.net. You can write me, and maybe we can get that on the show as well. We have Tippi Felsenstein, who also is a writer, and she's going to help us with that as well. Lori will as well. Deontay Gray is going to come on. He's a guy who's the executive director of Urban Promises. What they try to do is help people educationally go from zero to college in economically, underprivileged areas. So we've got a kind of an eclectic show going on today. And as I said, we will try to get to your questions, comments, whatever it is that you want to talk about. But I have a couple questions for Daryl. What do you feel out there in the market in terms of what's going on in the real estate market? Do you have any sense of what's happening in terms of product or supply or angst or anything like that?
Well, the people that thought that the interest rate was going to rise substantially, are a little upset because they felt that they were forced to dive into things a little early, and
right.
Then it didn't happen.
Right. No, that's a good point. That's an excellent point. I think that the anxiety built up about that had led people to take a rate that they probably shouldn't have or wouldn't have had they waited 6 months to a year.
And so it's just been sort of hovering around,
right.
4, 5, 6, 5, 4, 6, 4, 5, 6, 3, 4, 5, right?
Well, yeah, we'll get into what the rates are, but you're right. Anxiety on payment, and that's usually in the form of either sticker shock on the price of what you got to pay or on what you have to finance it for.
And, the other thing is, time on the market.
Right.
I know several people that have been trying to sell houses recently, and the rumor is, from the time houses go on the market, they had 3 or 4 offers the next day to some houses. I know 2 in particular that here in Ventura that were on the market for like 60 to 90 days, and they had to lower the price a couple of times. And these were not unreasonably priced properties.
It's so unusual. What we hear nationally, and there's a couple of articles that I read before coming to the show, is that housing is scarce and prices are going up. Not just, in Los Angeles, San Bernardino, Riverside markets. Now, Ventura, I didn't look into. I should have looked into that. But there are pockets that aren't like that haven't really risen as quickly, or the demand isn't quite there. And there's a couple of reasons for that. One of the reasons is what you mentioned earlier, is that even though the price of your mortgage has gone down significantly, you can get a 30-year fixed for 3.75% to 4%. And that's a very, very good rate. But the prices of the houses have not come down where we thought they would at the beginning of the year. So what you have is this gap that is looking solely to rent because that's all they can afford, even though they'd like to buy.
And, the last thing is we're in Southern California, and constantly people are saying, oh, you can move to Albuquerque, or you can move to Austin, or you can move to Phoenix or Flagstaff or Prescott or any of the states that are probably anywhere from 6 to 12 hours car drive away,
right,
for maybe a fifth of the money that you would spend here.
Well, yeah, you mentioned all those places, and they're in great areas. They're just not the top 50 markets. They're in markets whereby you can go for $250,000 and get something, which is not only a good piece of land, but a nice house, a couple thousand square feet, which is really nice. I mean,
but you need to balance out the weather.
Yeah,
you need to balance out the employment.
All of that is true. It's funny you mentioned the weather. There is now a algorithm. I'm going to say algorithm because that's a trendy word, right? There's actually just a formula that the MI companies are developing around the weather, meaning that if you have a property that has mortgage insurance, and there are a lot of properties that are conventional properties under 20% down, which have mortgage insurance. Some of them are borrower paid, some of them are lender paid, and certainly every FHA loan has mortgage insurance. But they're trying to develop future trends in the weather, in climate, whatever you want to call it, that will determine, for instance, the risk of your house getting damaged by whatever the weather is, and then build that into the insurance premium.
Yeah, a lot of people are in a floodplain and don't even know it.
Oh, not only that, but if you look at places like Florida, that could be underwater, the whole state. I mean, it's unbelievable. I mean, you basically, the whole state.
It was a swamp, and it's going back.
Yeah, exactly. It's being reclaimed. So with the hurricanes, now we're in hurricane season, right? And it's funny. It used to be baseball season in the summer. Now, of course, we've been replaced with hurricane season and tornado season. And
the sad part is there is no earthquake season. They just sort of show up randomly.
Well, you know when it is. It's usually when it's hot and dry, and it's been that way for a while. And it's usually January or February, and that's when we get socked here in California. So given the fact that those, insurance
companies, when the animals flip out,
Oh, when they're looking for that cross over the 101 to make sure that they can, bridge over. I love those drawings, by the way. I'm sure you saw the renderings, right?
Yeah.
They were great, I mean, this is Southern California, the cuckoo land. So we're going to build a bridge, a very large, expensive bridge, so the animals have a place that they can get across, as if they won't figure it out.
The people were going to put up walls.
It's really unbelievable. So anyway, let's get back to the supply-demand issue and the reason why we're having such anxiety, in my opinion. I asked Darryl, and he sees some of it. I see some of it, certainly. And in the fact that you've got this gap between people who want to buy and not being able to afford it because the scarcity of housing keeps properties priced higher than possibly they should be, or certainly what these current buyers can afford. And we're talking obviously about the millennial generation who really wants a house, who wants to get out there and buy something rather than continuing to rent. Now, back in 7, 8, and 9, even further down the road, 10, 11, in many cities and counties across the U.S. where foreclosures were high, where people were walking away from mortgages, properties were sold well below what they should have been sold because of the lack of buyers in the market. So a lot of borrowers today would love to get into those type of situations where the properties that were purchased in 2007, 8, 9, and 10 by large investment groups, and we're talking about groups that have 25 to 30,000 of these houses across the country, and there are many of them that have never sold them back to the market. So we have taken a whole bunch of these houses off the market and have been that way for 10 years. But there have been not enough houses built in those 10 years to satisfy the demand. So while you have renters renting in housing that keeps getting more expensive, the gap between that and the fact that we're not building enough houses to bring the cost of houses or to raise the median price of houses to an area where you, millennial, can afford it, we have pent-up demand, rising housing prices, and anxiety in the marketplace because nobody can take advantage of those low interest rates. what is going to happen? We haven't heard peep from Ben Carson about that. Well, I'd like to, because I think the housing is probably at the heart of what the issue is here in Southern California, with the affordability index continuing to skyrocket. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks for tuning in, as I said, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929, telephone number here at the studio. If you pick up the phone and give us a call, we can try to help you navigate what's happening in the real estate world. I was kind of doom and glooming it in the first section of the show. Sorry about that, but it is what it is, and the market is strained because of the lack of inventory out there. So if you are one of these people who needs to vent, talk to somebody, get the best deal possible, yes, please give us a call. And if I don't have the answer, I'll find somebody that does. I know the company that I work for, Malibu Funding, who sponsors the show. They have on their website about 50 different loan officers. So if you would like to, call one of them. That's no problem at all. Again, I'm Jeff Barton, your voice in the mortgage industry. We do bring to the show some interesting guests, people who have different takes on what goes on in the mortgage world. And as I preempted earlier in the show, Tippy Felsenstein, who has graciously accepted to be a writer for the new proposed game show, which, Tippy, I'm not telling anybody, by the way, what the name of it is. I kind of teased it out there a little bit. But anyway, Tippy Felsenstein, writer and entrepreneur, welcome to the show.
Thank you, Jeff. I love the name, though, and yeah, don't tell anyone.
Don't tell anybody yet. No, because somebody will steal it. You know the way it is.
Yes, and it's such an awesome name. You don't want anyone to even get an idea.
Exactly right. Okay, so I can prep the audience a little bit. You have been a writer for some time. That's kind of what you do. It's how I met you through another person on Facebook who talks about us as radio show hosts and podcast people. Tell the audience what it is you do in that world. And then a little bit about your writing and what you're doing currently for the show we talked about.
I have been a writer since I was 6 years old and since I learned how to write. It's been my life passion. And I write about all kinds of things. And there has been times when all of a sudden I got the urge to write and I couldn't find paper. And I literally would write chapters of books on toilet paper just to get it out of my head.
Right.
So writing has been my total obsession. And what we're doing for this amazing show that we're not giving the name for is writing out stories about buyers and experiences that real estate agents have with buyers, and not pleasant experiences.
Okay, let me ask you a question. Let me just jump in there for a second. As an outside observer listening to these particular stories, do you get a sense from the people telling you the stories that it still burns with them somehow, or it still lives in them emotionally?
I don't know that it still is there emotionally, but I do know that it has changed the way they do things. It has changed their perspective on their business.
Right.
It definitely made a difference in their lives. Some of them, some of them are still wounded.
Right.
I like to call it.
Right.
But it has changed a lot from that experience.
Well, thank you for that, because the reason I ask you is because I know you have had your own experience in the real estate world just recently, right? I mean, didn't you just buy something?
I actually closed escrow yesterday.
Oh, excellent.
On a beautiful cabin that I've been wanting to buy for many, many years. And I'm so excited. I can't wait to go out there. And it's been rough. It's been rough because every transaction has so many challenges and so many nightmares. You're dealing with a lot of people. You're dealing with a lot of different things, elements. Mm-hmm. The mortgage, the buyer, the seller, the inspector, the evaluator. So many different elements that can break down everything at any moment.
Right.
And it's usually a huge investment. It's not an investment, a small investment, like buying a car, which is kind of a big investment too.
Right.
But it's usually a life savings. So it's very stressful. And people, when they're stressed, they're not exactly at their best behavior.
Right. Right. And I think getting to the heart of most of these stories that you're writing for the show, that you're dealing with people, whoever it is, the agent, the buyer, the seller, the mortgage people, whoever's involved. There's so many people involved. Everybody in that transaction has an emotional cost or an emotional investment in the buying and selling of it. And so getting to that is really what the writing is, and you've done successfully a number of times for that purpose. And that's, I guess, what writing is, right? Trying to get at what the heart of the issue is and then presenting it to the reader.
Yeah, it's getting the story first. And one of the things that I happen to be really good at, which is the most difficult thing, is getting people to tell you the story in the way that you want to hear it without TMI,
right,
and without going off, and just basically saying, yeah, this is what happened to me. And that's very difficult. It happens to be something that I thought everybody had, but it's there's a special approach.
Right.
And it's also talking, most of the people that I talk to are real estate agents, and
right,
they don't want to jeopardize their professional integrity either.
Of course.
So once they tell me the story of what it is, then I have to question them down to the meat and the bones of the story.
Right.
To get rid of all the fluff, of all the outside fluff.
Well, because
and that's when I get what I send you.
I think that's really it. Most people want to go off on some side tangent as opposed to know what happened, what is the story, try to get the feel for how it made them at the time, and then to deliver
right,
it very succinctly. Because in any enterprise where you're trying to turn something into something else, there's a time constraint, certainly in television. And so if you need to boil down a person's 3-month ordeal to a 2-minute story, you really need economy of words.
Right, right. And you need them to tell you to focus.
Right.
And yeah. And everybody has a different personality, so you have to approach them a little bit differently. But I love it. It is so much fun to get people's stories and to figure out what's going on. And this is things that were very dramatic in their life. It's not things they're ever going to forget.
Right.
Ever. So I just love it, and I think that's why I do it well. I'm willing to do this full time. It's one of those jobs that you go to work every day saying, I can't believe they pay me to do this.
Right. No, I understand that. And I wish I had a job like that. No, I'm just kidding. I love my job at the mortgage. No, when you do it a long time, you get involved, and I think what happens in markets like we have now, where we've had a 10-year run, really since 2010, the real estate and mortgage markets have been really, really successful. People get worn out, and they burn through enough emotion of a number of where it becomes you're doing it. But if there's one more person who complains or one more person who needs extra, you just can't do it. I had it happen to me today with one of my processors. So, yeah, that's where I think we are in the marketplace, at least on my end. But your fresh approach to talking about it is really a joy to read.
Thank you.
No, thank you.
I love that you say that.
No, it is, because it reminds you that you're not alone out there, and a bit of humor from all of it, because on some of the stories, I really see, something that happened to me or something that, is possibly avoidable had you just done one thing. All of these things, are very, very interesting from a producer standpoint, and certainly anecdotally from somebody who's been in the business a long time.
Exactly. Yeah.
Exactly. Beyond this,
I'm having a great time, though.
Oh, excellent. Beyond this, we got about a minute left. What else are you doing in terms of your writing career?
So can I give you a shameless plug on my book that I finished writing?
Please do. I wish we had knew about it sooner, because I would have brought it up sooner.
Okay, so the name of the book is called Wake Up and Plan for Roses.
Okay.
And it's on Amazon. All you have to do is go and type in Wake Up and Plan for Roses. And basically the book is what I learned from a devastating car crash that I had on my birthday when I turned 40.
Oh, my.
And I think it's a really good book because it's not just reading it, it's also a workbook so you can actually get ideas on what you want to do.
I want to have you back. Now you've got my interest piqued here. See, the title is Wake Up and Plant the Roses?
Wake Up and Plan for Roses.
Oh, Plan
the
for Roses. I see.
That you plan your life consciously or unconsciously, whether you know it or you don't know it. You might as well wake up and you might as well plan it the way you like it.
Excellent. Thank you very much. We've run out of time. I want to have you back, especially since you're ongoing with the project, and also to talk more about this book. It's fascinating. Thanks, Tippy, for coming on the show.
Thank you so much. Have a great evening.
And you too. Thank you very much. That's Tippy Felsenstein. She's a writer for TV as well as a book she just wrote, Wake Up and Plan for Roses. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929, our telephone number. If you save that number and call me after the show ends, you will get me on the phone. Right now, if you call me, I cannot answer because, as I said, I'm on air. Usually we have it hooked up so I can do that, but this week's a little bit different. Sorry about that. If you have questions, if you hear something on the show that you want to talk about a little bit more in depth, all of these things are great. Info@malibufunding.net. That's my email address, and my Twitter account @Jeff6493. All of these things carry with it a little bit of what we do here on the show. My Twitter usually does a mortgage minute at least once a week. The email account certainly is used to answer questions, and the telephone number always works. You can get me at any time, although I would suggest you try to do it during business hours. Those are when I'm most awake. Anyway, with us each and every week are great guests that talk about what they do with their companies, the products that they bring to the marketplace, whether they're real estate brokers, whether they're agents, whether they're title people. Today's no exception. Lori Preege was with us from Spring EQ. They do a lot of interesting, different products from most people you hear on the show, and I want to welcome her. I don't know if this is your first time on the show, Lori?
It is. It's my first time. Thank you for inviting me.
Oh, and thank you for coming on. A lot of account executives don't like doing it. Either they get nervous or they just don't like it. But I appreciate you doing it because I think what you offer at Spring EQ is different. Can you explain a little bit about what I'm teasing to the audience about what it is that your company does and some of the things that set you apart from everybody else?
Sure. So at Spring EQ, what we offer is a fixed-rate home equity loan. So in the current marketplace, a lot of people have home equity lines of credit, which are basically credit cards against your house, you could say, with adjustable rate features and high life caps. So we offer a fixed-rate loan, which is fully amortizing, pays down your principal, and you have that stability of a fixed-rate loan. And we do that to a 100% CLTV as a cash-out product.
Oh, so you do it.
That's very unique.
Yeah, that's very unique. So you do it not only with purchase being the second, you also do it as a cash-out.
Correct, yes. So most banks that are offering home equity lines of credit only go to 90%, and some only go to 80%. So we go all the way to 100%. We do require high credit scores. We look for a 740 credit score, and we use the Experian 8 score, which is the credit card score.
I see.
And if somebody wants to find out what their Experian score is, they can get that online for free. I'm not don't know if I can say who the creditors are, but
right. No, that's.
I can provide that website or not.
No, that's fine. I mean, it's a very interesting product. Where do you see your mix at in terms of purchase versus cash out in terms of the use of your product?
Well, we do, the majority of our loans are standalone transactions where there's no refinance or purchase occurring. And then about 40% are purchase transactions where they want to only put 5% down.
Right.
So we're able to accommodate that with a first and second mortgage combo. And then the remainder would be finance.
What kind of refinance? Just straight refi?
I'm sorry. In conjunction with refinance.
Yeah, we're losing you a little bit here.
Out.
If I understand what you're saying, the a straightforward cash out refi on a second, and how does that work when you come to subordinate the first?
In the future, like in a year or 2 years, is that what you mean?
Yes, it is.
Yeah. So if your clients get a second mortgage from us, and then in the future they want to refinance their first mortgage, they would just contact their servicing department, and we could work with them on their subordination.
I see, and it hasn't been a problem so far. So obviously, in this market, you see a lot of opportunity. How has business been?
Business is great and gets busier every month. A lot of consumers are not familiar with the availability of a fixed rate second, so a lot of people go to their lenders and they say they want a HELOC, not realizing there's an option for a fixed rate second. We do have to spend a lot of our time educating our clients that it is available, and if most people take a fixed rate first, and we find most people really want a fixed rate second, they just don't know it's available.
I see. And the advantage of doing that versus a 100% cash out refi on the first is because the first has such a terrific rate and they don't want to lose the rate? Is that usually what happens?
Correct, yes. So if you go cash out on the conventional side, you're limited to typically 90.
Right.
And we can go all the way up to 100. So a lot of clients will take a rate and term refinance on the first, and then they'll get all their cash out on the second. Or some people will take cash out on their first to 80 CLTV, and then they'll come to us for more cash after the fact. And a lot of people are using it for either home improvement, because that's a really hot market right now,
Yep.
or they're using it to pay off consumer debt.
How long are these? These are 30-year amortized, but what is a typical term on it?
We offer terms of 15 to 30 years.
Wow.
And they are fully amortizing, no prepayment penalties.
Wow, so this is a really good deal. And the competition in the marketplace, do you see that the larger banks are doing this, or are you pretty much, you and TCF are the only ones in the space right now?
We're the only standalone fixed-rate second mortgage lender that I am aware of in the marketplace.
Right, me too.
TCF will do their HELOC 90 sales TV standalone, but we will go 90 and ignore the HELOC.
We have some reception issues on our end. Sometimes you are sounding great and sometimes not. So, yeah. I wanted to ask you about your prognostications about the economy and the marketplace. Obviously, with a company that does loans like yours, there has to be some nerve or nervousness about the state of the economy and the housing economy, especially if we're ever going to resemble the housing bubble that we had back about 10 years ago.
Yeah, well, we feel that we're in a pretty safe position. Foreclosures are down significantly. I think I read that we're down to pre-2007 arena, so we're not too concerned with that at this point.
Okay.
We are looking for good credit scores with those higher CLTVs, and we know that people with those high credit scores pay their bills on time, so we're not too concerned about the hundreds. And the market just keeps going up, every month it seems like there's more and more price increases. So we're kind of bullish on it right now.
Yeah, that's good to hear that, because obviously this type of loan requires that not only the real estate market, but the general economy and the stability out there remains and continues to remain, especially if you're amortizing a loan out 30 years. And it's good to hear that. And I like to share that with the audience, that this is not a usual type of product. It's a much needed product. And my own particular loan officers who work at Malibu Funding have been screaming for this type of product and seconds for some time. I don't know if you've had occasion to talk to more companies, but what is the feeling when you talk to brokers and lenders out there about the product?
Well, I always get a lot of loan officers that are very excited to hear that the 100% financing is back.
Right.
And everybody's excited about being able to offer the fixed rate product. And it's very well received. We'll always have people that want to do HELOCs. There's always a good amount of people that could really use that product because of future use purposes.
Right.
But we do feel that most people with consumer debt would really benefit from the fixed rate, or if they're doing a purchase, they really should go with that fixed rate product.
I agree with you 100%. Okay, just quickly, what would be the cost and the rate on a loan, generally speaking?
On a loan amount under $175,000, we do go all the way up to $500,000. But on loan amounts under $175,000, we'll stick with that for now. The total cost is approximately $1,500, and that includes all costs, including appraisal, escrow, title, notary, includes everything. As far as rates go, it's hard to give you an accurate rate, but we have rates that start in the mid-5s, and they go all the way up into the 9s, depending on credit score and your CLTV.
I see. Okay.
So we do offer rates lower than prime.
No, that's, obviously it's a second, it's going to cost you more, but if you're quoting these kind of rates, and that 740 FICO score is probably the lower rate, and, if you don't have 740, it's going to be a higher rate. I assume that's how it works?
Well, to do the 100% financing, you have to have the 740 credit score, but we actually will lend all the way down to a 640 credit score at a lower CLTV.
I see.
That's also unique to the marketplace.
That's great. Hey, Lori, you know what? We run out of time up against it. I want to have you back on because I think, there's obviously more things that we can talk about, and certainly a reminder to the audience that these products are available, and you're the person to call. You want to shout out your phone number quick?
Sure. My phone number is 949-610-3379.
Thank you very much. I appreciate you coming on the show.
Okay, thank you.
Thank you. And that's Lori Preach. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Well, welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's our telephone number here. Pick up the phone, give us a call. We talk a lot about your mortgage or the lack of a mortgage, or maybe you just want to talk about somebody else's mortgage. We can help you with questions, have some solutions. If I don't have them, I know people that do. I've been in the business a long, long time. And so we just had on the last segment a person who could help you with seconds, HELOCs, things that we haven't seen in the marketplace for 10 years. And those are the kind of solutions that you might not hear other places or might not know about. But as I say, it's not my company, it's their company, Spring EQ. And Lori Preach was gracious enough to come on the show and talk to us about her particular solutions. We can help, and we will continue to try to help anytime we get new information about what's going on in the marketplace. To that end, another person who we have not had on the show before, but I'm very grateful that he's agreed to come on the show, Deontay Gray from Urban Promise. He's the executive director over there, and they deal a lot in helping people in urban settings through a number of different programs, but one of the ones that my friend who recommended him to come on the show was talking about was educationally. But regardless of all that, Deontay, welcome to the show. Thanks for coming on.
Jeff, thank you so much for having me on. It's a pleasure. Thank you.
Thank you, too. Okay, explain to our audience what Urban Promise does and what's your role in it.
Yeah, absolutely. The mission of Urban Promise is really simple. We want to raise up a new generation of Christian leaders who are determined to restore their communities and cities and make them look better than what they are now.
Recently, and I mean in the last few days, we've had this ongoing war of Twitter fighting between the president and Representative Collins in Baltimore, one of the cities which I guess is in great need of services like your own. Why'd you choose Los Angeles?
Yeah, Los Angeles is a city that's always been on my wife and I's heart. We're coming from Charlotte, North Carolina.
Right.
Charlotte had ranked last in a recent study for upward mobility, right next to Baltimore, actually. Mm-hmm. Los Angeles, for us, a huge melting pot of different people, diversity, but there's also some significant challenges here in terms of gang activity and education. Urban Promise is an international model that I think is going to do really, really well here in the city of Los Angeles.
Okay, explain it. Tell me what it is, what you do. Obviously, it's a lot of going and talking and planning and meeting and trying to develop leaders who believe as you do. But specifically, what do you do and how you do it?
Yeah, so let me cast a vision. 3 parts: reach a child, raise a leader, restore community.
Okay.
Reach a child, we do that with our after-school and summer programs. So we have elementary through middle school students coming to attend our program every day after school, where we're giving them literacy instruction, we're helping them with their homework, they're able to come in and participate in Bible classes, sports, a STEAM curriculum, a number of things. And then the second component is raise a leader. So this is the one that gets me most excited. We're raising local high school leaders by offering them year-round employment. So they're paid employees to be the mentors, the coaches, the leaders for the younger students.
I see.
We're also providing them with academic support, a Bible study, leadership development, and guidance through the whole college process as well.
That's an ambitious program. The funding for this program is obviously, I guess, the most difficult in terms of trying to get people not only supporting what you do. Do you have a way by which people could donate or give? Do you have a website or a phone number or a way by which they might be able to do that you could share with us?
Yeah, absolutely. So if people are interested in donating, they can visit urbanpromisseinternational.org /urbanpromise-Los Angeles.
Okay, that's going to be something that we need to put up on the show as well, so that when people come to YouTube and you go to my YouTube channel, you can see this, as well as the video feeds from KCAA, KMET. The show will start airing on Sunday for the next couple of weeks. You can get the address of what this is. And Deontay, you can send that to me off air via text so we can make sure we get that right, okay?
Yeah, absolutely. I want to make it as simple as possible for anyone who's willing to come alongside and support us.
Well, yeah, because you're coming into an area that has a rich history in not only what you're trying to do, but has failed in several areas of the city. And certainly anybody who's willing to put their feet into the ground and try to raise up a generation of people, one child at a time, is to be admired and helped. You mentioned leadership. Tell us your idea of what leadership is.
Yeah, so for our high school students, leadership is simply them being the role models, them leading by a positive example.
Okay.
To me, one definition is a leader is someone who shows others what is possible. So when you're working in impoverished or challenged or whatever adjective you want to put for the type of communities that we serve, it's important for leadership to just show others what's possible. So for our high schoolers, it's showing the younger students that college is possible. Being a positive role model is possible. Following the ways of the Bible is possible. So that's what leadership is to me. We want to. The third part of our vision is to restore community. So that is lifelong servant leaders who are committed to the city. And that can be education leaders, that could be church leaders, that could be marketplace leaders. Heck, that can be someone, a former high schooler, coming and taking my position as the director of the organization. That's the long-term vision that we have for the work that we're doing.
Well, we always look at the city and see areas that need help and think that, okay, somebody's going to get out of there. That's what everybody says, right? I want to get out. I want to make it out. But you're talking just the reverse. No, you want to stay and rebuild and regenerate. Is that what I'm hearing you say, too?
Yeah, Jeff, I grew up in Detroit, Michigan.
Right.
And Detroit is a tough city. And I think Detroit ended up being what it is today is because so many people left the city. So we're talking about restoration. It's participating in a long-term renewal process of a community in the city where you don't have to escape it, but instead you get and you catch the vision of making your community better. Essentially, this community belongs to the people who reside here. So we want to teach our high schoolers, we want to teach our young people that to take pride in where they come from and don't abandon it, but instead do whatever you can to make it better.
Now, are you affiliating yourself with a particular church or faith, or did I misunderstand you and you already mentioned that to me?
Good question. No, we're not. We're not connected with a particular denomination.
Okay.
We are a Christian organization.
Okay.
And Urban Promise doesn't have a brick and mortar building.
I see.
So we partner with the church here in Canoga Park Presbyterian Church, and they simply act as the host site of the organization. So this is where the kids will come after school and over the summer to receive and participate in the program.
Do you have a local phone number or your own way somebody who's listening to the show right now could say, oh, man, I got to call this guy? Because that's how most people do it, right? They have a cell phone, they pick it up, they call.
Yeah, give me a call. It's not a local number. It's a Tennessee number, 423-737-7364.
So you grew up in Detroit. You spent time in Charlotte, obviously, with your wife. I don't know if you have children, but you have a Tennessee phone number. You are a well-traveled person.
Yeah, connecting the dots. So I spent my elementary years in Detroit. I later moved to a very small town in Tennessee. I stayed there for college. Afterwards, I just felt a sense of calling to go to Charlotte, and just felt like, hey, these kids are growing up in the similar community that I grew up in Detroit. Let me do what I can do. And it's not Detroit, but it looks very, very similar in Charlotte. Let me do what I can to be a light, to be a leader, and to be a role model for them. And then my wife and I actually got married not too far away from where I am now in Canoga Park. We got married in Ventura, California.
Oh, yeah.
And I think that's when we really fell in love with the area.
Sure. No, it's beautiful in SoCal. I've been here a long, long time, and actually we record the show in Ventura. But I wanted to thank you for coming on the show. I want to check in with you at a future date to see how things are going, see if we can help any further. Thanks for coming on the show.
Jeff, I can't thank you enough for having me. To any listeners who want to be in touch, please give me a call. That's 423-737-7364. Or you can email me, Deontay@urbanpromiselosangeles.org. Jeff, thank you so much.
Thank you, Deontay. This is Deontay Gray from Urban Promise. He's their executive director. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks for tuning in. Email address here is info@malibufunding.net, and you can reach us also on YouTube if you go there and look at our YouTube site, Jeff Barton, the real estate voice, and you'll see that we come up. All these shows are online. Las Vegas Real Estate Show is online. We've got a couple of things planned for the last part of the year, and I'm kind of excited about it. 2 different projects, and we're hoping to bring them to the market, both dealing with real estate, what happens in the real estate market when buyers and sellers don't get along and disaster happens. So stay tuned for that. The show is going to be called, I'm not going to tell you, I'm just going to tease it out there a little bit. Anyway, thanks for tuning in. Let's get right to it. News to use section of the show, mortgage rates. What is happening in the mortgage rates this week? 30-year fixed was down to about 3.875. Actually, that's up a little bit. It was 3.75 to 4% last week. These are averages across the region, what we normally tend to see from different lenders. We survey a number of them, so that's how we come up to this number. The FHA VA loan, 3.625%. The VA loan, okay, let's talk about that for a second. It's a great loan. If you are a veteran, if you are family of a veteran, these particular loans are 100% guaranteed, and they are 100% loans. Now, there are some exceptions, exclusions, things you have to know about the loan, but most veterans will will be eligible for it. I would say all veterans are eligible for it. You need what they call a certificate of eligibility, and you can get that by going to the VA website. These loans are really good. As I said, they're guaranteed loans. The rates are excellent. As I just quoted them, 3.625%. There is a fee up front, and there are some additional things that you need to know about the loan. So give us a call over at the office if you would like to. Again, I'm Jeff Barton. We are sponsored by Malibu Funding. That's a loan company, and that particular company who is the sponsor of the show, and they have been for 5 years. So really appreciate what they do. And again, if you go to the website, malibufunding.net, and you look for the loan officer section, there's 40, 50 loan officers in there. Choose one, all experienced. The company, I think, does not hire and train individuals. What they do is look for experienced people who want a good, solid company which is in multiple states to be able to help you. Malibu Funding is in 10 different states. So if you're looking for a VA loan in any of these states, certainly Nevada and Texas, Arizona out here on the West Coast, Washington State, we can help you with that too. Back to it, 15-year fixed, 3.5% to 3.625% are the range of the loans. And the 15-year is a really good option for you if you know that you are, as well as the 5-year ARMs, which are down to 3.375%. If you have a need to get out of the property quickly, i.e. you're only going to be there 3 to 5 years. You've moved to a new town. Your job demands that you move every 3 to 5 years. These 3-1 ARMs are great. The 5-1 ARMs are great. The 7-1 ARMs are great, especially if you know that's what it's going to be, because a adjustable rate mortgage is only fixed for that certain amount of time, and then it adjusts. Now, coincidentally, the adjustable rate mortgages, which have been in the marketplace since 2010 after the mortgage crash, have really stayed, steady. And if you want to research this for more closely, go to the LIBOR, the London Interbank Rate, and see exactly where the last 3, 5, 7, 10, 15, 20-year adjustable rates have adjusted to. You'll see that it is as steady as a rock. Why? Because we've had an expanding economy. We've had very low risk in certain sectors, which would indicate through either your bond holdings or the stock market that it's very, very secure loan. So therefore, we don't have adjustables the way we used to have. And the way we were calling last year when adjustables came due after, a lot of people in 2007, 8, and 9 were still in these interest-only loans, 10-year interest-only loans, and they're called IOs. So if you were in 2007 in an IO, it came due in 2017. Same with 18, 19, and those particular notes, a lot of them have come and gone because people have refied because the rates have been so low, which is really great. But that's why people who know about interest-only accounts or the London interest rate, which is a lot of the loans out there are using this particular index. And the reason is because it's steady. It's very, I guess, for lack of a better term, it's the lowest rate out there. It's the most consistent rate out there. Now, there are federal fund rates. There are different, different hedge funds, different insurance funds who have their own rates, who in the private sector, non-QM and hard money loans, those rates are different because they're obviously set by those particular institutions. The LIBOR rate, for my money, and if you go to the LIBOR rate, you can actually see it. It's on most financial website pages. You will see the Fed funds rate or the District 9 or the District 11, but the LIBOR rates are the ones that we pretty much go by in our business because that's how most people are judging their interest rates when they're making their rates up each and every day. That's just like I say, it's the most steady, it's the most rock solid, and it's the one most lenders use. So the 5-1, the 15, the FHA, VA loans, and the 30-year fixed, they're all really good rates right now, and I think it's one of the things that has kept the economy going has been the fact that the interest rates are low. Last month, June saw a great rise in real estate sales nationally. It's still down from last year, but it was up from the month before. In California, Southern California specifically, we saw a rise in prices at 6.5%. Now, at the beginning of the year, I was calling for probably no more than 3 to 5% raise. We're already past that, especially with last month's gains. Now, that's pretty incredible when you think that we have low interest rates. Well, as I said, we have a lack of property. That's really why the prices are going up, right? We have a lot of buyers that want to buy, and last month we had a lot of buyers that did buy. I guess they were, got out of school, looking around, or they're just looking because they're a first-time buyer, or they're a step-up market. There was a lot of sales in Southern California, caused prices to rise by 6.5%, let's say. How does this bode well for you when you're sitting out there at home and you're trying to figure out what you're going to do? I don't think it bodes well, to be honest with you, because I think, as we said last week's show and the week before, we're looking at prices that are rising because there's lack of inventory. The lack of inventory does not help the marketplace. It squeezes buyers, especially into situations where they don't want to be. We as realtors, we as professionals in the mortgage industry do not want to see a housing price bubble. We were thinking we were getting back to more of an equal market, equal number of buyers, equal number of sellers, and that's a good thing. That's when prices only go up, as I said, 3 to 5%. But right now, that's not what's happening. So, I'm just word to the wise and be careful, because that's, as I said, something that is not going to help anybody in the marketplace. If we see rates rising again, which it's possible, and by the way, the Fed rate went down 25 basis points, as everyone was thinking it was going to do. So that did help your credit card. That did help your car payment. That did help a few other things. So let's just move on to a couple other things. Oh, the California solar electric update. So we talked on the show a couple of weeks ago about my own particular project at the house, and why is it a 13-page submission to the city in order to get approved for solar? Well, the paperwork goes on and on. I received from SCE, that's the local power company here, a 12-page, what they call a net metering agreement. Think about this for a second. The sun is free to anybody. I pay for the collection of the power from that from the sun. That's me. That's on me, right? But I need an agreement, 12 pages, with the local power company that I share this power with them. Now, what kind of hibby-jibby mumbo-jumbo is that? Why do I have to do that? I know we only have a couple of seconds left, but why?
Because that's the way they can make money.
Yes, exactly. Which is
everything.
Right. Which is the problem, not the solution. Anyway,
the problem, that's what drove you to do it in the first place.
Exactly. That is exactly right. And when the zombies come, I'll still have power, so they know where to find me. Anyway, I'm Jeff Barton. I'm your host for The Mortgage Voice. Thanks for listening in this week, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.